So we had one leg down to 40. We should have a second leg down. So I think the 2-bar reversal at 46 is a good setup for a push below bar 28. So at a minimum, we should hit 1180 and a quarter, which is 2 ticks above bar 22. Good looking bar, breakout bar on 48. I mentioned that at the time that since the market is going to hit 80 and a quarter, if you shorted, you can get out at 80 and a half. So you could short at 81 and a half and be pretty confident of at least scalping out for a point. I shorted 81 and a half. I tried to add on more at 82 and a half and hit my limit order and didn't fill me, forming a lower high and a low 2 short at 52 with a bear bar. And I don't remember if I shorted there. I just don't remember. Okay, market had a good breakout bar on 53, and then 54 set up a high 2 long. Obviously, with that much momentum down, and then the tails on 54, it's a bad long. That means sellers will be shorting at and above the 54 high, at least for a scalp. 57, good-looking bull reversal bar, testing the gap between 5 and the pullback at 8. So it's a little double bottom with 8. The channel down was fairly steep, so I doubt that the market is going to go straight up. It should have a higher low. Okay, we've had a 2-bar reversal of sorts over at 58, 59, 60. I mentioned at the time when you have 3 large, you could also call it a low 2 short, test of the moving average. When you have large overlapping bars, 3 or more of them, right below the moving average, forcing you to short at the bottom. Most of the time it's a bear trap, and I'd rather be buying at or below that low. And it turned out that 61 was the higher low, but then it's forcing you to buy fairly high up. Good-looking breakout of the bear flag on 62, formed an II. I was going to short below 63, and I'm glad I didn't get filled. I was going to short it on the basis of a wedge with 58 and 60, but I think that it made more sense to go long, or even to try to buy at the 63 low. And clearly that's what happened. Traders were trying to buy at the low. They didn't get filled, and they had to chase the market up. Clearly the market's in a channel. That means bulls are buying at and below the lows of the prior bars. Bears, if they are shorting, they're not shorting below bars, they're shorting above bars. And anywhere from 60 onward, if they were shorting above bars, they weren't making any profit. So that means the market is probably going to go higher, and those bears are going to get flushed out. I think 69 is interesting. You can argue 3 pushes up, 62, 66, and 69. But it's the first attempt to reverse the channel, and I think that's a risky short. Buying above it, I think that's risky because I still think today is a trading range day. Good looking breakout bar on 70, and then the bear reversal bar above the double top and the failed wedge top. So this could be a failed breakout. Buy climax at 70, large range bar. Reversal from the breakout of the bear trend line. So I think this is a reasonable short. It's better to look for a lower high, but there's enough going on here so that it's okay. Good looking entry bar 72. Bad follow through on 73. I exited break even, and that was just dumb because it should try to come down with all the things going in its favor. The overlapping bars, I'm on an urgency, and we're starting to get a bull bar and then overlapping bars. That's a problem for me. Little climax down to 76, then an inside bar, and it just levitated into the close. I personally didn't want to trade there because too many overlapping bars. Let me just briefly talk about the weekly chart. The bears obviously want a double top, and they want a bear close on the week. We've been up in a spike in a channel. The daily chart and the channel does not look strong, but it is a channel. And because it's a channel, I think you can either short above highs or below a lower high, and we haven't had a lower high. That option is out, but shorting above highs is okay. Bulls continue to buy below the low of the prior bar. 60-minute chart, trading range for 2 or 3 weeks now, and the channel is starting to have larger swings and more overlap, so it's getting mature, and the two-sided trading is increasing. So I think the odds favor that sometime soon it'll start trading down and hitting the prior higher lows. I will continue to look to buy puts at new swing highs or put spreads, and like today, if I get a gift on the open, I'll take maybe half off, and if the market does not look sufficiently bearish, I'll get out of the red.